Welcome back to a Real Estate Wisdom podcast. I'm your host, Vishal Kapoor, and today in our 70th episode, we are diving deep into mortgage rates and making informed predictions for 2025. So let's get started. All right, folks, let's talk numbers. As of January 12th, 2025, here's we stand. The Bank of Canada's overnight rate is currently at 3.25%, and this has led to some interesting developments in the mortgage market. The best 5-year variable mortgage rate is sitting at about 4.35%. For fixed rates, be looking at around 4.09% for a 5-year term. Well, this is what I found on the internet. Now, these rates have come down significantly since their peak in late 2023, and that's got a lot of people wondering, is it time to lock in or should we ride the variable wave? Well, the dilemma is to lock or not to lock. And here's the $1,000,000 question. Folks, should you go fixed or variable? Well, it's not a one-size-fits-all answer, but let's break it down. The case for variable rates. First, what's going to look was very popular. Economists are predicting further rate cuts in 2025. Historically, variable rates have often been cheaper than fixed rate. Not last 2 years though. Well, the case for fixed rates, they offer stability and predictability in your monthly payments. If you are risk averse, locking in now could protect you from potential future increases. However, here's a crucial point. The Bank of Canada has been cutting rates, and many experts believe this trend will continue. By the end of 2025, some forecasts suggest the overnight rate could be as low as 2.25% to 2.75%. Now, looking into all the latest developments, what's next? Let's talk about what the Bank of Canada might do next. Their next rate announcement is coming up on January 29th, and here's what we are seeing. Many economists are predicting a 25 basis point cut at this meeting. However, the decision will heavily depend on upcoming consumer price index and employment data. We have seen December data was on the high, employment rate high, and some of the economists were saying we did too early to rate cuts. Speaking of employment data, let's look into the latest figures. While we don't have specific December 2024 data, the trend has been showing a gradual increase in unemployment. As our last update, the unemployment rate was expected to rise to about 6.8% by the end of 2025. And this softening labor market could put additional pressure on the BOC to continue easing rates. But right now, the political instability and everything, things are everywhere. Now, what are the critics saying? Well, it's a mixed bag. Some experts like those of CIBC and Desjardins groups are quite bullish on rate cuts, expecting the overnight rate to drop to 2.25% by the end of 2025. We are hearing that from last year from a lot of banks. Others, like the economist at BMO, are a bit more conservative, anticipating a rate of around 2.5% by mid-2025. Interestingly, Vanguard's outlook suggests that the BOC might aim for the lower end of its neutral rate change, which is between 2.25% and 3.25%. So what we're seeing right now is the variable rate comeback. I have a conversation for a lot of people. I'm not the mortgage agent, but a lot of people reach out to me. And here's a fascinating trend we are seeing. Variable rates are making comeback after plummeting in popularity due to the aggressive rate hikes in 2022 and 2023. And they are now looking attractive again. In fact, some mortgage experts are calling 2025 the year of the variable rate. Why? Because as the BOC continues to cut rates, those with variable mortgages will see immediate benefits. For example, if you are sitting on a fixed rate 6%, while your neighbor's variable rate dropped to 4.5%, that 1.5% difference could mean significant saving over the life of your mortgage. Yeah, they have paid high interest rate before as well for a year or two. Now, let's explore the pros and cons of bundled mortgage deals, which is happening and offered by big banks. The mystery behind those tempting mortgage rates you see advertised. Ever wonder why some rates seems too good to be true? Well, let's explore the world of relationship pricing, so-called, in the mortgage industry. Here's the big bank strategy. Banks are increasingly pushing for multi-product commitments from their mortgage clients. They want credit card, investments, and more. Why? Because it's all about maximizing their profits and securing your long-term business. Here are some pros of bundling, though. Potentially lower mortgage rates. I know I got the benefit from that. Convenience of having multiple financial services in one price, and possible promotional pricing on other products. But here's a cons as well. So cons of bundling: less financial freedom, pressure to buy products you may not need, regular pitches for additional services, and potential difficulty in switching banks later. Yeah, we can talk more about that sometime. Now, let's this scenario. Let's paint a picture here. Imagine you are a first-time homebuyer looking at a $500,000 mortgage. You got two options. Option A, big bank offers you a rate that's 0.15% lower than the competitors, but you need to open a checking account and have your mortgage payment withdrawn from it. You probably heard it so many times when you were first-time homebuyers and opening an account. Option B, a monoline lender offers a competitive rate without any additional requirements. So, what do you choose? Let's break it down. Here's the math. On a $500,000 mortgage with a 25-year amortization, that 0.15% difference could save you thousands over the term of your mortgage. But remember, this doesn't account for potential fees or opportunity cost associated with the bundle products. What the experts have to say? Well, when I talk to experts like the mortgage agents and brokers, hear what they have to say. While the big banks' offers can be tempting, it's crucial to look at the bigger picture. Consider your long-term financial goals and whether the bundle products align with them. Don't forget to explore options with mortgage brokers and online lenders who might offer competitive rates without the strings attached. And you probably see that's why the mortgage brokers are more popular at some types. Well, it's interesting to note that some banks like RBC and TD are focusing more on price competition, which is great news to consumers. However, others like CIBC and Scotiabank are doubling down on relationship pricing. So, which one to choose? Remember, the best mortgage isn't always about the lowest rate. It's about finding the right balance between between rate terms and flexibility that suits your unique financial situation. Always do your homework, compare offers, and don't be afraid to negotiate. While these predictions and current rates give us a good idea where we headed, the mortgage market can be unpredictable. Always consult with the financial advisor, as I mentioned, or mortgage professional before making any big decisions. So that's all for today's episode of Real Estate Wisdom. Keep an eye on those rate announcements, and we'll be back soon with more insight into the ever-changing world of real estate and mortgages. Until next time, happy house hunting. Bye for now.
Disclaimer: the information provided in this podcast is for informational purpose only and should not be considered as financial or investment advice. Consult with your professional before making any real estate decisions.